Hello everyone, I'm Nova Lui, Head of Investor Advisory at RHB Bank. Welcome to our monthly Investment Insight podcast. Today we are unpacking the big market movers and policy shifts that define August 2025 and what they could mean for your portfolio over the weeks ahead. Let's begin with the standout market performers. The Shanghai A share market emerged as August's clear winner with an impressive 8.07% growth, maintaining strong momentum throughout the period and finishing at its highest level. The FTSE China A50 delivered exceptional performance at 7.83%, demonstrating that the China onshore market strength was broad-based rather than isolated. Asian market generally outperformed their global counterparts. MSCI Singapore delivered solid 4.14% return, while our home country's FTSE Bursa Malaysia KLCI achieved a robust 4.52%. The FTSE Taiwan Stock Exchange Index showed respectable performance of 3.46%, though investors should note that notable volatility, including sharp mid-August spike before settling back. In contrast, developed Western markets struggled significantly. The Euro Stoxx 50 managed only 1.78% growth, and S&P 500 at 0.9% show lackluster performance, highlighting a clear divergence between Asian and Western market sentiment. Federal Reserve Governor Lisa Cook was fired on 25th August. This represents the first removal of a Fed governor in the central bank's 111 years history and marked a dramatic escalation in pressure on Fed independence. Cook was dismissed over allegation of mortgage fraud, which she has disputed. This action threatened the Fed's institutional autonomy and could introduce significant volatility to capital market, especially given the timing coincides with expectation for September rate cuts. Washington agreed to take 9.9% equity stake in Intel for about US $8.9 billion, a rare direct government shareholding in a top US chip maker. Intel cautioned that this could complicate international sales and affect eligibility for future support, underlining how industrial policy is now a core market driver. Washington plans 100% tariff on imported semiconductors, with exemption for companies manufacturing in the US or committed to do so. This directly benefits Samsung, SK Hynix, and TSMC by funding their new facilities in the United States, while chips from China face higher risks. In Malaysia, which is a big player in chip testing and packaging globally, Trade Minister Tengku Zafrul Aziz warned that Malaysia will lose the major market share in US if its products become less competitive as a result of the imposition of this tariff. Federal Reserve Chairman Jerome Powell struck a cautiously dovish tone at the Jackson Hole Symposium, opening the door to a possible interest rate cut in the coming months. While he did not explicitly promise an imminent cut, Powell noted that the Fed's policy is in restrictive territory and acknowledged that shifting economic risks might warrant an adjustment in rates, noting growing downside risk to the job market even as inflation remains a concern. Gold surged to near US 3,400 per ounce, representing historical highs driven by Fed policy expectations. This represents a significant safe haven flow that often correlates with equity market uncertainty. US 50% tariff on India taking effect on 27 August. This represents a massive escalation targeting one of the world's largest economies, specifically retaliating against India's purchase of Russian oil. The tariff threatened to disrupt global supply chain and could trigger broader emerging market sell-off. India's central bank decided not to change interest rate this month after lowering them earlier. They want to see how previous cuts are working and watch what's happening globally. The India stock market got excited because India announced plan to make their tax system simpler, reducing it to just 2 tax rate and cutting taxes on everything items like food and household goods This should help people to spend more money, which is good for the India economy. China left its key loan prime rates unchanged this month, underscoring a preference for incremental easing rather than a big bang move. July's activity data was softer. The signal matters more than the specifics, keeping the focus on stabilizing demand and confidence. China's financial hub of Shanghai eased home buying rules in the latest attempt by authorities to contain the nation's prolonged property crisis. Shares of Chinese developer rallied on speculation that policymakers will unveil more steps to support the housing market. Finally, closer to home in Malaysia, we have seen positive momentum. Ringgit strengthened to an 18-month high against the US dollar, posting over 5% gain year to date as foreign investors return amid regional stability. This contrasts with peers stumbling and highlighting Malaysia's appeal. Commodity-wise, palm oil futures climbed 1.4% on a one-month high of 3,931 ringgit, driven by stronger demand outlook. Let's wrap up our summary for the key event for August 2025. Thank you for tuning in, and we look forward to bring you another in-depth analysis of global development next month. Don't forget to connect with your relationship manager to discuss opportunities for rebalancing your investment portfolio. See you again in our next podcast series.